want as much goodwill as you can when you're selling your business. And I'm not talking about good vibes. We're talking about accounting goodwill, and you want it because it's taxed at a lower rate. So most business sales are sold as what's called an asset sale. And in an asset sale, different portions of the sale are awarded different tax rates. It's based on whether it's going to be taxed as ordinary income or capital gains. Federal level today, ordinary income tops out at 37%, while capital gains tops out at 20%. So generally, the portion of your sale that's attributable to physical assets, accounts receivable, or inventory are going to be taxed as ordinary income, and that's because you've likely written those off at some point. You've likely depreciated those assets fully. You took a charge when you bought the inventory, and that accounts receivable is just really revenue that would eventually have been taxed as profits anyway. But the portion of your sale that's considered goodwill, which is the difference between your sale price and those three items mentioned, the physical assets, the inventory, and the accounts receivable, that gap is the goodwill of the sale. And goodwill is typically taxed at the capital gains rate. So the more of your sale that's considered goodwill, the lower your effective tax rate is going to be on the sale. So when negotiating the sale, you want to allocate as little as possible to the value of those physical assets and as much as possible to goodwill. But the buyer wants to do the opposite. So when the buyer buys the assets of your business, they have the ability to deduct those from their taxes. So they get to take the depreciation on those assets. So in this instance, your gain is their loss and their gain is your loss. And that's how it's typically done. There are some ways to restructure the deal so it actually becomes a win-win where both parties get what they want. If you're looking for something like that, we can help reach out and we can help you structure your deal so that both parties reduce their tax rates. But bottom line, you want as much of your sale taxed at the capital gains rate and as little of the sale taxed as ordinary income as possible. But if you need help preparing your business for sale or selling your business, we can help you all across the United States.